think we got to start off with Jerome Powell on the Hill today, semi-annual testimony. What are you expecting from Jerome Powell today? And, of course, we have the jobs report coming up on Friday.
I mean, today and tomorrow is all about Powell. I think the market's going to hang on his every word. I don't really think he's going to say anything too consequential, honestly. I think they're waiting on more data. Was January jobs an anomaly or not? How sticky is CPI going to be next week? And until he has those data points, we'll see what happens on the 22nd, but I think it's still going to be 25 basis points. I think 50 basis points kind of got shut down by Daly this week. And I think he's just going to reiterate what the rest of the Fed governors have said recently, which is higher for longer. And we are trying to avoid that stop, start, sticky Fed policy that you saw in the 70s and 80s. And so I think it's just reaffirming what's already been said. I'm not really looking to find anything really, I don't think he's going to say anything controversial. I think he's going to try to avoid poking the bear.
Yeah, I think he's going to have a tough dance to do here. A lot of questions, obviously, from the Hill. So I want to ask you, we're about 2 weeks away from that Fed meeting. Are you expecting a 25 basis point hike or a 50 point basis hike? And I know you said that Jerome Powell is going to be pretty careful, but does he tip his hand either way when he testifies?
I'm expecting 25. I think the market would be hugely shocked if it's 50. I was looking at futures this morning. It's pricing in 30 basis points, which is very heavily weighted to 25 basis points. I think if anything, you could see if the data comes in softer, a surprise on the upside and a little bit of rally here. We are very reluctant bulls, as I call myself. But if you look at the supports that's held, I think the Fed, it has tried to communicate very hard. Hey, we are higher for longer. We do not plan on cutting rates. The market has seemed to absorb that because that's just reiterating again what Daly, what Greene, and some of the other Fed governors said last week. So I think if you saw 50, I think that would be a huge downside shock to the market, but most likely it's status quo in 25.
All right, so speaking of the market, we have two earnings reports today, not necessarily huge earnings reports, but two very different industries. We have Dick's, which is in the sporting goods space, and then, of course, we have, blanking on this one. I got to just look at the notes here. CrowdStrike. How could I forget? I actually cover CrowdStrike.
I know.
In the cybersecurity space. I know. Come on, help me out, Vicki. Two very different companies reporting. What are you expecting from each one, and what will that tell us about investing in the last month of this first quarter?
Sure. Dick's is another referendum on the consumer health. They're a little bit higher end, so we'll see how much discretionary spending people had, how inflation affected their purchases. We saw in some of the big box stores, discretionary big ticket items did get a little bit hit. So I think Dick's is just another referendum on the consumer. For CrowdStrike, we're seeing if they can buck the trend. A lot of cloud-based stocks really struggled. And so it's going to be less about what did you do for us fourth quarter, a lot of focus on the ARR, the annual recurring revenue, and what are you going to do for me going forward? Are we going to see this above trend growth? And they've seen their peers really struggle because if their guidance at all at 23 and 24 and beyond isn't as high as the street wants to see, that's really what's been causing these stocks to struggle. So I think some of this technology, especially cybersecurity, has really struggled this year. And a lot of people have really shrugged off decent earnings, and a lot of it, the guidance isn't strong enough. They're really punishing the stocks. So I think on one hand, we'll see how healthy the consumer is. On the other, we'll see how healthy the cloud space is, and if we're able to see spending continue. All
right, before we let you go, we got to get to your picks. Hopefully stocks that are not struggling. I have one I was really interested in, MPC. Explain why that's one of your picks right now.
So I do think that peak oil in the last 2 years, we've had a great run in energy stocks. So we have gone a little more neutral on the energy sector. However, the Marathon is still one of my favorite picks in this space. They're like at a 5 times PE. They've got a 225 dividend. They printed $2.8 billion in cash, excess of dividend and minority shareholder distributions in just Q4. They're going to continue to print money. Everybody's been traveling. If that's been one consistent part and data point is that consumers want to travel and spend money, I think you could see an above average driving season. Yeah, their refining margins might come down slightly, but they're still hugely profitable and trading at such a reasonable valuation. I think it's a good place to hide, collect some dividends. And we're going to still need oil and gas. We're seeing continued increases in demand there. So it's a good place to be.